CPA here with another important update for you regarding some coronavirus relief that's related to the CARES Act that was passed back in March for the coronavirus relief and things of that nature. Definitely want to take some time with you to go through some of those key provisions. This is going to be just a high level though. We're not going to get into the nitty-gritty details. For that, you'll have to kind of listen to some follow-up videos that obviously I will do as we get more information from Treasury, from the SBA, and from the IRS, just like we were waiting on last time when they passed a bill like this. But just wanted to really update you regarding some of those key items to consider and think about as you go into year end of 2020 and going into tax year 2021. Some key items to consider. So first and foremost, the bill that we're talking about is in Division N of the Senate Appropriations Act. So that act, the Senate Appropriations Bill, that basically is a huge, massive funding bill, right, for the government's operations. It's like a 5,000 page bill, a little over 5,000 pages. So if you feel like going to read it, by all means, go ahead. But I wouldn't recommend it. I've kind of taken the brunt of that for you, so you don't necessarily have to go and do it. And like I said, we're going to be learning more information about some of the provisions of it over the next several days, so just hang in there with us. But definitely go ahead and listen to this video because we're going to talk about the individual provisions that affect individual taxpayers, and then we're going to talk about the business provisions that affect business taxpayers and business entities. Okay, so let's first talk about some individual provisions that were included in this update. Those that were affected by the coronavirus that were eligible for unemployment assistance under the CARES Act will get an extension of their benefits for a total of 50 weeks, and it is available through March of 2021. Okay, so that was the first update within the bill. Another update was for those that are receiving unemployment assistance for weeks beginning after December 26th of 2020 and through March 14th of 2021, you will be eligible for an additional benefits of $300 per week that you're on unemployment. So that's half of what it was previously. It was previously $600. That ended a few months ago. And so now they basically have brought back a little bit more of that to help out people that are still on unemployment and still struggling because they are out of work. Okay. The states are now required, just as an FYI, to provide employers a means to report when job offers are made and not accepted by employees that are on unemployment. So if you are on unemployment and you're out there interviewing and you get a job offer, or let's say your employer that used to hire you wants to bring you back and they send you a job offer to come back to work and you decline that, there's a good chance that's going to get reported to the unemployment office, and if it does, you're going to lose your benefits. So basically, they're going to put the kibosh on people just kind of sitting on unemployment. So just a heads up, that is something that's going to come out. It's obviously going to take a little bit of time for them to put that into place, but once it does, definitely something to think about. Okay. Individuals, this is going to be something for every individual that makes below a certain threshold of income. So individuals are going to be eligible for $600 of basically same thing as the last time, except the benefits got cut in half for the adults. So $600 for each spouse is what the economic impact payment is this time. Okay, and then you get $600 per eligible child. So last time I believe it was $500 per eligible child. This time it's $600 per eligible child. The same requirements as last time for the income requirements. Okay, so if you make less than $150,000 being married, you will pay, you're going to get the full $600 per person. If you are head of household under $112,500 of income, you'll get the full payment. And if you're an individual under $75,000, you get the full credit or payment. Now, if you're over those thresholds up to a certain level, you will get a reduced credit, just like last time. It phases out, I believe, completely around $200,000 if you marry finally join. Okay. Now, keep in mind, again, like last time, this is a rebate on your 2020 tax returns. Okay. So what that means is when you go and file your 2020 tax return, if you did not get the full credit and your income actually did go down, then you will get more of it. If you did get the more than you should have, you will not have to pay it back. Okay. Now, it appears, at least on the surface, that they will only be looking at 2019 tax returns for this economic impact payment. So if you got the payment last time based on your 2018 tax return, because you hadn't filed your 2019 tax return, I think the logic here is that everyone should have filed a 2019 tax return by now. So if for some reason you have not filed your 2019 tax return, you definitely want to make sure you get that done as soon as possible. Okay. And I will forewarn you that the electronic system for e-filing right now is down for all tax preparers. So what that means is you may have to wait until they put the system back up, because if you file a paper return, I can almost guarantee it's not going to get processed in time to get the payment. So they stopped sending out these advance payments on January 15th of 2021. But not to worry if you don't meet the deadline. You will still get the payment even if you don't meet that deadline once you file your 2020 tax returns. Okay, so as soon as you get your 2020 tax returns completed, you will get credit for those payments that you may not have received, whether it was from the first time or for this second payment that's coming through right now. Just like last time, if you are on Social Security, you do not have to worry about filing a tax return just to get the credit. You will still get it based on your Social Security income. Okay. If you received an emergency student financial aid grant related to the CARES Act, they made some changes to that to where it was not taxable previously, but now it's not taxable completely. So what that means is you basically don't have to pay any taxes on it. It doesn't affect your American Opportunity or Lifetime Learning Credit either. So it's basically just a nice tax-free grant that they gave to you in that regard. So that's a nice little benefit. In 2021, you can now give $600 to a charity and get an above-the-line deduction. So for 2020, that was $300, and as far as I know, that has not changed. That's $300 per tax return. So if you're married, it's still only $300, okay? If you're single, it's $300. But going into 2021, if you're married, you will get $600. So each spouse will get $300 to give to charity, essentially. The nice thing about that is you do not have to itemize. So there's still time to make that $300 contribution for 2020, by the way. So if you have not made that contribution yet and you're looking for an easy tax deduction, it's definitely an easy one to get. Just make sure you keep some type of documentation that you contributed to a 501c3 charity. They should send you some sort of receipt or something because it's over $250. So definitely just make sure you get that documentation, put it into place. Your tax preparer will probably ask you for it. Okay. FSA amounts that normally expire at the end of each year will be eligible to be carried over for an additional year. So normally there's like a little period where after the end of the year where you can still use it. Well, what they've done is they said, well, actually, we're just going to let everybody use any leftover funds for one additional year. So any leftover funds from 2020 will flow over to 2021, and you just have to use them by the end of 2021. And then any leftover funds from your 2021 FSA will actually flow over to 2022, and you'd have to use them by the end of 2022. So they give that benefit for the next 2 years. Okay. The Earned Income Tax Credit and Child Tax Credit in 2020 can be determined based on your 2019 income instead of your 2020 income, to the extent that your 2020 income would give you less of a credit. That's actually a pretty huge benefit because, a lot of people who may have been out of work this year and don't get the full Earned Income Tax Credit that they normally would, or the full child tax credit that they normally would. That's actually a pretty huge benefit. So we'll have to see exactly how they implement that provision, but that sounds like a pretty key item for some low-income people. The medical expense deduction floor is moved permanently to 7.5% of AGI. So instead of doing 10% of AGI, it's now 7.5% of AGI when you're itemizing for medical expenses. Okay, so that should help some people that don't have certain medical plans like an HRA or HSA or something like that to get some deductions for the medical expenses, hopefully. So those are the key provisions from an individual perspective. Now let's go into some of the key provisions from a business perspective. Okay, So if you did the employee payroll tax deferral, you have until December 31st of 2021 to pay the taxes now instead of April 30th of 2021, okay? Essentially what that means is, which hopefully many of the business owners took my advice and did not do this. But if you did do it, we're talking about the employee payroll tax deferral, not the employer payroll tax deferral, okay? If you did the employee payroll tax deferral, you were supposed to have paid whatever was deferred by April 30th of 2021, okay? What they said instead is, okay, you can take up to December 31st of 2021 to pay it. Now, the issue that a lot of employers are going to have, that if they did this, is they have to hunt down that money from employees if they leave their business and get them to pay it back. If they're still employed, it's fairly easy. You just take it as a deduction from the payroll. But other than that, yeah, you basically are going to have to try to figure out some way to hunt them down. Otherwise, you're on the hook to pay it for yourself. Okay, so that's something to keep in mind there. PPP. So the expenses are now fully deductible. So you've heard me talk about this before, where the IRS was contending that these expenses were not deductible, even though Congress really intended for them to be, which essentially made the PPP funds that get forgiven taxable to business owners. That was a huge, huge fail on the part of the IRS, in my opinion. And so I'm glad that the Congress basically came back and told the IRS to pound sand. I was completely happy about that. So really excited about that. I think that's going to be an awesome, awesome provision. And so there's also some other things that are coming as well that we'll get to. This is even great for S Corps and partnerships. So the concern with S Corps and partnerships was, will they have basis to take the expenses even if they, are if the IRS ruling wasn't there? And so they did make sure that they increase your basis for the tax exempt income, essentially, from the forgivable loans. So you will have the basis to be able to deduct these expenses that you use the forgivable funds to pay for. So that's awesome. So basically all business owners should get a 100% tax deduction as long as they use the funds according to the plan, which was, you had to use 60% of the funds for payroll, and then 40% could be for other eligible costs. So as long as you use the funds for proper expenses, the forgivable amount should be 100% tax-free. If you received an EIDL grant or advance, however you want to call it, it is now includable in income. It is not includable in income. Let me correct myself there. And any associated expenses are deductible, making these grants 100% tax-free, just like the PPP loans. Okay, so the PPP loan forgiveness is not taxable, and the EIDL grants are officially not taxable. Okay, you don't have to worry about the associated expenses and that issued with the IRS or anything like that. If you had an SBA loan prior to the CARES Act and you received relief forgiveness for loan payments and interest based on the provision in the CARES Act, that is not taxable as well. Same thing as the PPP and the EIDL funds. Those loan forgiveness amounts are not taxable, which is pretty huge. I actually have a couple clients who got this. And so that is a pretty nice benefit. You do not have to pay any taxes on those forgiven loan amounts. Okay. The Families First Coronavirus Response Act provisions have been extended to March 31st of 2021 instead of them ending on December 31st of 2020. So if you have someone that catches coronavirus between now and March 31st of 2020, you can still get a tax credit for paying them their wages for the Families First Coronavirus Response Act. Okay. These are benefits that allow small businesses to get reimbursed for compensating employees, essentially, that met certain criteria. I have a complete video on that. None of the provisions of that really change. It's just basically extending the time frame on when you're eligible to take those credits. So please go back and look at that other video for the Families First Coronavirus Response Act, to get the full details on that. Okay. Eligible uses of PPP funds were extended to include software and cloud computing services, okay? Property damage costs, supplier costs, and worker protection expenditures. There's a laundry list in the bill about what those items are and what the definition of those items are. That said, if you feel like you need to go that far in order to get full forgiveness, definitely work with a professional to make sure that you're counting those costs correctly, because you don't want to put something in there that's not eligible and then you get audited and kind of get screwed. So what I would recommend there is try as much as possible to use just payroll, utilities, and rent payments and stuff like that before you go down to using some of these other items. Just because, you know, it'd be better all around for you and a lot easier for you to document all that stuff, okay? Now, keep in mind as well that if you already had your loan forgiven, you can't go back and use the other items to qualify for forgiveness. So you're stuck with whatever you put into the application for forgiveness, which is why I was super recommending that people hold off on putting in their forgiveness applications, because you could be missing out on some benefits. And I'm going to talk about something that later on that you may have screwed yourself over by doing the forgiveness application early. If you qualified for this employee retention credit scenario that I'm going to go through a little bit later. And so I definitely hope that if you haven't submitted your application yet, certainly hold off until we get all the details on all of this, and let's make sure that you get full benefit of all the related provisions that are eligible, okay? For PPP loans that are under $150,000, okay, there is a simplified forgiveness application. This is one of the things I was waiting for as well, that will help to decrease your cost of the forgiveness applications, you know, and your effort in kind of completing those. So this is going to be created with no more than 1 page in length, and it's just going to have some basic information on there and a certification from you as the business owner that you met all the requirements for forgiveness, okay? But keep in mind, you have to retain all your records for 4 years. You can still get audited by the SBA even though it's under $150,000. So make sure you keep all your records. What I recommend is create a little file, like a Dropbox file or a Google Drive file or something, whatever you use to store your files. Make sure you have a copy of that. I would even, you know, put it in a couple different places. Same thing with all your tax records and everything like that. You should always be keeping your tax records for at least 4 years. I recommend usually 7 years, honestly, to protect yourself and be the safest you can be. So definitely just make sure you keep all those records and to where you can get audited if you need to. Another thing that was nice is it made it very clear that employee insurance that was allowed to be included in your payroll costs does include not only health costs, but also dental, life insurance, disability insurance, and vision insurance. So all those insurance type costs for your employees are includable in those health insurance costs, okay? They made it very clear as well that if you were not in operation by February 15th of 2020, then you are not eligible for a PPP loan, okay? So if you started your business after February 15th of 2020, you're not eligible, unfortunately. That's just, those are the rules of the road, so sorry for that. But yeah, you're not gonna be eligible whether it's for the original loan or for the new one, okay? So another awesome thing that came out is they authorized a second PPP loan for some business owners, okay? So if you are a business that has no more than 300 employees and your gross receipts during the first, second, third, or fourth quarter of 2020 are at least 25% less than from the same quarter in 2019, then your eligible loan amount for the second loan is going to be 2.5 times your monthly payroll costs for the 1 year period before the date of the loan application or calendar year of 2019, okay? So you get to actually choose in this scenario, so it gets a little bit better, whether it's the current payroll amount or the previous payroll amount that you get as a loan, okay? The maximum loan for these second loans is going to be $2 million, down from the $10 million that was previously allowed. Now, if you are a business that has a NAICS code, NAICS code, beginning with 72, okay, which basically is going to be restaurants and accommodation businesses, like hotels and lodging stuff, things of that nature, you can get up to 3.5 times the monthly payroll cost for these second tranche loans, okay? You had to have used all of your funds from the first loan in order to get the second loan. So don't even think about applying if you haven't used all the funds from the first loan to go and get a second loan, okay? But yeah, you have to have that 25% reduction in gross receipts for the second loan. That's just something that they put in there. I actually agree with that. I think there's frankly been a lot of people getting these loans that didn't necessarily need the loans per se. And so from that perspective, I think that's really a good test to have in there for people to get a second loan. Okay. You're going to have to provide documentation that you met the revenue loss standard, okay, for these PPP loans in order to obtain forgiveness. You're still going to need to use at least 60% of the loan proceeds for payroll costs in order to qualify for full forgiveness for the second tranche of PPP loans as well. So that means if you take the loan, you're going to have to basically pay people. Even if you're shut down or closed, you would have to pay people and put them on the payroll for at least 60% of the cost, and you can use the other 40% to cover your rent and your utilities and all the other kind of stuff that you need to cover. There's going to be some rules issued by the SBA where you can obtain additional funds in the event you should have been able to receive more money in the first tranche due to late rule changes and things of that nature from the first round of the PPP. Okay, so there will be some additional help in that regard to get you those additional funds. So even if you don't meet the 25% gross receipts test, there's a possibility you could get some more funds from that first tranche that you were not eligible to get because of timing of when you did your loan versus timing of guidance from the SBA. Okay. And if you never applied for a loan the first go around for the first tranche of the PPP loans, you can qualify to apply under the old rules and get an initial loan with this new program. Okay, so they allocated a certain number of funds for some initial loans for people who never got the first loan. Okay, and there is no 25% gross receipts test for that first loan. As of right now, anyways, we'll have to see and make sure that the SBA doesn't try to make some kind of rule or something like that. Again, like they did with the first set of loans, they definitely did that quite a bit. But as of right now, it doesn't look like you'll have to show a gross receipts decline to get a first PPP loan if you never got one the first time. There are some other, provisions of the PPP loan for the second loan. For example, if you're seasonal employees and things like that. I'm not going to go into it for this video because I want to kind of stay very high level, but we will definitely go into more detail on some of those items in our follow-up videos to this. If you applied for the EIDL loan and received an advance less than the $10,000 that you were eligible for, you may be eligible for the difference and get the full $10,000 if your business is located in a low-income community and you have a gross receipts reduction of more than 30% and you have fewer than 300 employees. Okay, this is pretty key and huge for some businesses like barbershops and beauty salons and restaurants and some lower-end clothing stores that are kind of in low-income areas. This is actually pretty huge. So, because they were limiting those loans to $1,000 per employee. So if you were a sole proprietor or an independent contractor or something like that, you basically only got $1,000. So, which really sucked for the small businesses because they really kind of needed those, and they weren't really eligible for very much on the PPP side either. So they really didn't get much assistance. So I think this is pretty awesome, and there should be some funds available for those businesses that are in those low-income areas. The gross receipts test in this case is an 8-week period beginning March 2nd of 2020, beginning sometime between March 2nd of 2020 and December 31st of 2021. Okay, I'm sorry, that should be 2020. Relative to a comparable 8-week period immediately preceding March 2nd of 2020 or during 2019. This is kind of your test period. And those low-income communities that I talked about, how you would determine if you're in one is you go look at the new markets tax credits tracks that are out there. That will tell you if you're in a low-income community because that's what they're going to use to determine that for this rule. So there's definitely going to be some more guidance that comes out in regards to this, I have a feeling. So this is something that's very new in this one. So I think we'll see some more come out. So I'll update you once I have more information. But that's the information I have as of now. The EIDL advances are back, okay? And these are for new EIDL applications. Still not much funding appropriated towards them. So if you haven't applied, definitely plan on applying soon. as soon as the application is available and updated to include the advance again. It appears it will still be based on the number of employees. They didn't specify in the bill whether the SBA could or could not do that, as far as I saw. So hopefully they might change that rule, but I don't know. So they might keep it the same just to be fair with what they did with everybody else. But obviously, if you're in the low-income community and you meet the gross receipts test, you should qualify for the full amount of $10,000. Okay. This one is huge. The EIDL the EIDL advance that you got, whether it was 1,000 or 10,000. Okay. So if you got an EIDL advance, that does not reduce your PPP loan now. So you still get to get full forgiveness on the PPP loan, even if your advance was greater than your PPP loan. So that's pretty sweet. I had a couple of clients that were in that situation where they would not have gotten the PPP loan forgiven, so they were going to have to pay it back. So this is pretty awesome for those guys. And so you do not have to worry about paying back the EIDL advance portion of your PPP loan. It's now completely forgivable along with the EIDL. Okay. Obviously, that was something that the banks were a little upset about, and it seems like they had some lobbyists that got them some really key provisions in here added to the bill, so they got their way, it looks like, in that regard. And so it also, but on the flip side, it also helps out the business owners because you guys were going to have to pay that back, so I'm really actually pretty excited about that one. The employee retention credit was extended to June 30th of 2021, and the credit was increased to 70% of payroll costs. So if you have a reduction of, 70% of your payroll costs is what you're eligible for tax credit for. How you become eligible for the employee retention credit is if you have a reduction in your gross receipts of at least 20% from the same quarter in the prior year, or if you were not open in the prior year of 2019, the previous quarter of 2020 is what you would use as your test. Okay. The nice thing that they did, or changes they made as well, is that you can now do the employee retention credit and the PPP combined together. So you can do both PPP and employee retention credit, but you cannot use the same wages to qualify for both. So you can't double dip on the same wages. But let's say you got a PPP loan and it only covered some of your payroll costs, and you still have some additional employees that you could use the employee retention credit for, then what we can do is go back and amend your previous tax returns and for your payroll taxes and potentially get you some money back. So that's actually pretty huge and pretty key. And a lot of people weren't really paying attention to the employee retention credit, even though I talked about it a couple of times. So this is actually something that definitely want to work with your CPA or accountant to figure out if this is something that you would qualify for. And if it is, then definitely something to take advantage of if you qualify for it. They also changed the limit of the employee retention credit from $10,000 per employee for the whole year to basically $10,000 per employee for each quarter. So definitely helped out there because there was probably a lot of high income employees that were not really covered for very long with that 10K max. So it's actually pretty awesome. And the same threshold as before. Once you reach above 80, basically 80%, you get back to 80% of your previous quarters of your previous tax year's info, then you basically are no longer eligible for the the employee retention credit. So based on some changes to the employee retention credit, it very well might make sense to change some strategies related to the forgiveness application. We might want to, instead of just using payroll costs, it may make sense to use some of those other costs, like your utilities or your rent payments or mortgage payments or stuff like that. Because now if you qualify for the employee retention credit, you might want to do that in combination with the PPP. It might ultimately get you more money. Those types of analysis are going to be pretty complex and take on a little effort. So definitely recommend you work with a professional to make sure you qualify for both before you just go ahead and take them. But that's also a really cool provision in this new bill. So, and the last thing we'll touch on that was included in the new bill, which is pretty awesome as well, is business meals are fully deductible for 2021 and 2022. Okay, not tax year 2020, but for 2021 and 2022, as long as you're eating the meals at a restaurant, essentially. I believe it can be takeout or in person. So, but it just has to be bought and purchased at a restaurant. So that's pretty huge to me. You know, if you don't know, historically business meals are only 50% deductible. So now you get 100% deduction, which should hopefully, you know, encourage business owners to go and eat out with restaurants and things of that nature and get those deductions. So those are the key provisions: individual provisions, business provisions, etc. Okay. Now, one negative that came out of this bill is, unfortunately, the Congress basically said, screw you to all the CPAs and accountants that are out there that were helping people with these PPP applications, the EIDL applications and all that kind of stuff. So they basically said we're not going to be able to collect those fees that we were supposed to collect from the banks from their massive fees they got. So not very happy about that, obviously, but and unfortunately what that means is those costs are going to come down to you as the business owner, unfortunately. But we will work with you to try to get those applications done and get everything done that you need to get done. Again, we're trying to wait until we get complete guidance from the SBA on some of these items, but we can definitely start preparing some of these items, like your forgiveness applications for the first tranche, and also for the items that you need for potentially applying for a second loan and trying to figure out if you're eligible for that second loan. Okay, my guess is it'll probably take them a week or two before the applications will go live for maybe for the EIDL advance and for the SBA PPP loan. So it's probably going to take a little bit of time for them to put everything together. They should have hopefully been working on it already, but if they haven't been, it might take a little effort. So yeah, stay tuned on that. We will definitely do more videos and update you guys more once we have more information. But as of now, that's what I have for you. Hope everybody had a good holiday break. Hopefully you're able to take a little bit of time off and spend some time with family and relax and recuperate a little bit. The year's almost over. New Year's is coming up this week. Hopefully 2021 we can rebound from all this coronavirus pandemic issues and go into a new year and have some better results for everybody next year. So for now, that's all that I have, and we'll talk to you guys later. Hope you have a good day.